Welcome to another episode with Loans Elevated. My name is Broch Lassig, top 1% loan officer nationwide.
And I'm TJ Heidenreich. Together we bring the latest news, strategies, and insights in the mortgage and real estate industry. All right,
welcome to...
Always. It's never without doubt. Whenever I intro, he's got to steal it.
Oh. Okay, go ahead, Teach.
All right, we're back with another episode. Today, we're going to be covering what's really happening in our market, in the lending side, and the playing field is actually starting to level out.
Well, I think this is an ugly side of the industry, both real estate and mortgage. We're going to mostly talk about mortgage. It's the ugly side of the industry that nobody really wants to face, but we think it should be talked about. It's important for other industry professionals to understand this, realtors, and definitely clients to understand what's going on and some details about our industry. So we figured we'd share that.
Yeah, for sure. We heard from a colleague in Florida that 60% of lenders, was it 60? Was it
62%?
62% of lenders did not renew their license for this year.
Yeah, and the crazy thing is, so it's interesting because Florida happens to be a state that every mortgage lender has to renew their license on the same day. So it's a weird
It's
thing.
really easy to obtain data, though.
Exactly. And we haven't validated this, but what we heard is that 62% of people, that licensed mortgage people, did not renew their license, which means 62% of the mortgage field in Florida fell out in 1 year.
Which is crazy because the Florida market is doing relatively well compared to the rest of the nation.
Maybe even better than Utah.
Right.
I mean,
It's
they're
right up
like
there.
The red hot best market.
Right, which is crazy.
Yep.
So
Huge
it could be
deal.
higher nationwide. It will be higher nationwide.
Yeah, but yeah, most likely. It's crazy.
But I think this is a result of thousands and thousands of people getting into this industry when it was easy. In 2020, when rates were super low, everyone was looking to refinance. I mean, affordability was a lot easier with rates being low.
And the crazy thing was our industry was so loaded. I mean, loans and transactions were falling from the sky. There weren't enough people in the industry to even service the number of borrowers that wanted to get a loan. So, of course, a ton of people started joining.
Right. Do you remember the numbers of trillion the mortgage amount was?
It was about $4 trillion in mortgages, which is
like double
more than
projected.
Yeah, double what's projected this year, and like more than double what the previous like 10-year average was. It's more than double that we saw happen 2 years in a row, 20 and 21. Insane levels of mortgage production, which, like you said, brought in thousands of people in our industry. And the hard thing is, in our industry, it's such a low barrier to entry, which is frustrating for people like us. I mean, we consider ourselves highly professional in this industry. We dedicate our hearts and souls to understanding the industry, providing legitimate guidance. But there's no way that you can differentiate between somebody that has been in the business 15 years and done thousands of loans like I've done.
Right, and someone that just legit passed their test the day before, and this is their first loan they're originating.
Right.
And it's not as simple as just passing a test, because we're in a murky business. It's not just a straightforward thing. There's lots of guidelines. There's lots of homework you have to do on every single borrower. Every borrower is different. And
it's like reading laws.
Right.
I mean, it is insane.
Exactly.
There's like, this sub-bullet means something different, so you can't do that. But like it's very, very intricate, detailed. There's so much to it.
And constantly changing.
Yeah, like every day. It's crazy.
For sure.
Yeah. So now what we're finding is there's thousands of those people getting out. Like we said, Florida's a good sign of that. Thousands and thousands of people getting out of the business, sometimes without notice. So you ran into a client, or there was a situation.
Yeah.
Tell that story.
I had a client that was under contract on their house. They thought they were going to close in a couple weeks. That lender stopped returning their calls. They didn't know what was going on, but it turns out that lender actually got out of the business.
Mid-transaction, obviously they went with him for some reason. He quoted some super low rate or something that was likely unattainable, which is happening because there's desperation setting in. Our industry is going through a storm. Maybe the biggest storm. I mean, I heard one stat earlier this week in a blog that this is the biggest storm that this industry has seen in 27 years. So it's
bigger
not
than 2008.
Right. Worse than 2008 for mortgage people.
That's crazy.
It's a hard time. So there's desperate things happening, like these people.
So this lender might have not gotten a paycheck in months. So he got desperate, tried fudging.
He just said whatever he had to say to get the deal.
To get the client. But then it turns out he could not service that client the way he said he could. So instead of doing the right thing and telling the client he couldn't do it, he decided to ghost them.
Well, and here's the crazy thing is, maybe he could have done it, maybe not, but he probably lowered things so much that he wasn't making any money. So he's like, well, forget it. I got a job. So I'm bailing because there's no sense in sticking around for this deal to close. I'm not making anything anyway.
Right.
And that's happening.
And now this client is out thousands of dollars in earnest money that they had on the line to buy this house.
I mean, they're host.
Yeah.
It's stressful. And thankfully there are professionals like us. We can come in and save the day in those circumstances. But you don't you've just got to realize how, like TJ said, how murky this business is. And it's not quite as straightforward as many make it seem. And the fact is, not all lenders are created equal. Period. End of story. We might offer the same programs. We might offer, a mortgage rate and a fee, and like all these things might seem very uniform and straightforward. Those things are, but the consistency of a mortgage lender, the ability to guide and help you take advantage of the proper strategies in mortgage lending, because it is a very complex industry with a lot of opportunity if you actually know what you're doing to help clients through the decision-making process. Not to mention, you really want to partner with a mortgage lender who you can rely on the fact is going to be in the industry for a long time to come, because the loans that are happening right now, it's by no means the only thing to be considering. Are they going to be available to help you with a refinance later? And are they going to proactively be scoping out opportunities for a refinance later? I can tell you right now, the people that are discounting and acting in desperation, they will not. They're probably not even going to be in the industry, but they're certainly not going to be strategic enough to even be tracking their clientele in their database to be able to call you when the opportunity exists. Right? So you want a professional by your side.
Well, and that's, one of the first questions that we ask when we meet with the client is, what's their real estate vision short-term and long-term? Most lenders aren't even asking that, because we want to make sure that we're setting up this mortgage for you to help you benefit long-term with your real estate goals.
That's the frustrating thing is most of the competition is looking at this loan. They're doing whatever they can do.
It's very transactional.
100% transactional. What do I have to do and what do I have to say right now to earn this single loan with nothing else in consideration? We take so much time.
That's where our holistic philosophy really comes in.
Right.
It's huge.
It's a big
And you
deal.
mentioned consistency. And this is big for me, because a lot of other lenders say that have been in the business a long time. They ramped up their support staff during when loans were really easy, when there was lots of low-hanging fruit. Well, when times got tough, they laid off that whole support staff. So their systems have changed. And now that lender now has a completely different system now that they're trying to relearn than they did just a couple months ago.
Or better yet, if the market picks up just a little bit,
right,
no longer can they provide the service. No longer do they answer the phone. No longer.
Then their turn times. Then you're not closing your loan on time. They're not hitting deadlines.
Or they're rushing through things. They're missing something glaringly obvious.
Yes.
They can't approve your loan. You lose your earnest money. There's so much to it. It's crazy. And we're even seeing companies like this. So we're hearing about companies that are forcing their operational staff, like underwriters and processors, to clock a very limited number of hours. They cannot clock more than 30 hours in a week. And in addition to that, they've already laid off. So there's all these things happening, which doesn't allow the realtor to negotiate properly with confidence. It doesn't allow the client to really get the best experience by any means.
Oh, for sure.
It's scary. But then there's people out there bragging right now, which is funny, bragging about the fact that, I got my underwriting approval done in
10 days.
No, like 20 minutes. I saw something.
Oh, yeah. I meant like start to finish loan closed in 10 days. It's
and we can do that.
Right,
actually.
Exactly.
We've closed deals
that's
in
what I'm saying.
7
Everyone
days.
can do that right now.
For sure. That's the point. We can do that in any market. Right. Even back in 2020 and 2021, we closed. There were a couple of deals when we had to. We closed them in 7 days. The legal, or 8 days, I guess. The legal limit. You got to close it in a certain amount of time. But the fact is, when people are bragging about what they can do in this market from a speed and efficiency standpoint, I hope they can, because there's literally nothing else for them to do. There's one loan. Or there's a handful of loans, right? It's like the industry's down, 75%?
Yeah, crazy numbers. And that's where we can really pat ourselves on the back, is we haven't laid off. We haven't made any of those crazy changes where our process is still the same. And in fact, it's even more client service oriented.
Right. We haven't laid off, and we've invested the time into dialing in systems, perfecting the process, trying to look critically at like, what are we doing that maybe is not well serving the client or the real estate partner or the builder that's in the transaction with us, and we're working to actually improve our systems while keeping our staff and allowing our staff to get trained up and become better to provide better service. We're not making, but the fact is, it's because we don't make these. We also didn't staff up like psycho in the big time, right? So we're just, I think, what we can bring to the table, and we're not the only ones, but it's just consistency.
Yep, for sure,
and consistency in what we can offer, consistency in the service, consistency in the pricing. All of that stuff is important. But
for sure.
So one important detail which we touched on earlier is rates and fees, pricing on the mortgage. And the reality is all mortgage lenders in this aspect are basically created equal. We all have the rates from the exact same place. The only exception is like a portfolio loan, some weird loan that's unique. That's the only exception where it's not coming from
But if you're talking about standard Fannie, Freddie,
FHA, VA, any of these basic loans, we all get the rates from the same place. So if you're getting a quote that is dramatically different,
or seems too good to be true, it probably is.
It probably is, right?
There's a lot of red tape in our industry. Like, we can only stay within certain boundaries.
Well, and it doesn't matter. If we give you a 0% rate or a 100% interest rate,
we get paid the same.
Our compensation is the same. So why in the world would we give a higher rate? There's zero reason. So the ability, like if you're shopping, chances are the warning here is it's probably a move of desperation, because if there's like every lender should basically be right in this, but basically the exact same deal should be able to be offered by every lender. So then it comes to more of the qualitative benefits that a lender brings, which is how you should, in our opinion, make the decision on the lender. Like, are they tried and true? Are they going to be around? Do they offer the service? Do they offer the strategies? Those are the things that matter, because pricing should be the same. The programs generally should be the same.
Yeah, for sure. No, you hit that on the head. I think the main point here is, if there's a lender that you trust that has longevity in the market, and they're telling you that the deal can't be done, or if we're telling you the deal cannot be done, and another lender is, probably trust the person that's been in the market a while. I mean, we're not going to tell you to throw a Hail Mary and pray that catch gets caught and not intercepted. We want to make sure that we're getting you to the closing table and that you're closing on your home on time and not losing your earnest money. I think that's the biggest thing.
Yeah, 100%. I think just knowing that if it's too good to be true, or if there's, something that is being said that is not reciprocated among lenders, like simple guideline things or pricing, those types of things, it's like it is likely a Hail Mary move of desperation on the lender's part, and you got to be cautious, because that is legitimately happening. It's the hardest market we've seen, and
yeah, for sure. And if you have any specific questions for us regarding a quote, or regarding interested in getting into a home or refinancing later on, or even simply about the market, feel free to reach out to us. Follow us on all platforms at Loans Elevated, and we're more than happy to help where we can. Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.